everybody. Welcome to the TraderMerlin Show. It is your Friday weekend edition. How do I know it's Friday? Because I have a nice frosty beverage here. Lexington to bourbon whiskey today. Hope you all had a fantastic trading week. Hope your day is going better than our President Trump's is going right now. A little touchy situation going on with our political situation. Which, of course, as Joseph says earlier, says, please remind everyone to avoid politics. Kind of hard not to in a situation like this, but we will do our best not to dive down that political alley. What we do know is obviously there's going to be a lot of volatility in this market going forward because of Trump and him having COVID. Who knows exactly what the truth behind it all is, whether it's actually legit, publicity stunt, who knows, who cares. All I can tell you is there's going to be some volatility, especially over the next couple of weeks as we figure out how long he's had it, who else had it. I mean, it's obviously going to spread like wildfire through Congress and House of Representatives and Senate, so we shall wait and see. But that's neither here nor there for the discussion for today, although I did decide to spice it up a little bit and then put a little COVID picture here for our trading week wrap-up. But what I'm going to mainly do is go through the markets today. I will go through some charts, as I will bring that up here now for you. We'll dive through, look at some of the overall setups, what's happened for the week, which really wasn't the greatest week with regards to trading. Not a great start to October, but we can start down here at the bottom with crude oil and then start to work our way back up to the top. And then I'll go into a bunch of listener questions. So I hope you guys all have some questions lined up for me today. Okay, let's start things off with crude oil. Crude oil obviously taking punishment today. There were a couple people asking me about where's your buy point on it. Boy, I tell you, if you're long-term optimistic right now, probably is a buy point on it. You can see crude oil right now sitting at $36.97, but it's also right at this area of sideways consolidation we saw in early September. So for me, let me draw this on the screen for you here. We could theoretically be looking at this area that I'm drawing in yellow and say that's your area of demand going forward. And if I was to carry that forward, we are dead center of it. After that, you do have some levels that are considerably lower on crude oil where there might be a bounce. I don't see too many other really good spots, but the low point probably looking right around $32. It's really tricky to say because if you go off of the way that I look at things, we can see that clearly May, June, July, August was traversing to the upside. Then all of a sudden in early September we had some weakness and we failed to make a new high. So to me I could argue both ways. This is bullish and this is bearish. It looks to be more bearish simply because we're making lower highs over the past couple of months on the crude oil futures. However, this is one of those moments where you are at a low. You are at a point where it hasn't been able to get below this point for the better part of 4 months. Might this be the buy point here? And Adam says that is a strong red candle. Absolutely. It's a really strong red candle, and we've really had two ugly red candles in a row, very akin to what we saw back in early September when it fell from $43 all the way down to right around 37. So, to me, you kind of have to figure out what works best for you. If you're going long on crude oil at 37, then you better have your stop loss somewhere down below this little yellow box, which is going to be 36, maybe give it a buck of stop loss on this one, but that's what I'd be looking at there with crude oil. On the day, it certainly wasn't the best. It was a doozy of a day, honestly, for crude oil, down 4.52%, as you guys can see on my list here. Now, there was something really interesting. You rarely see switches like this. The NASDAQ, and I know it's kind of hard to read for you guys at home, but there's a list here that I keep of kind of the top 7 markets I look at for this show. NASDAQ 100 down 2.74% today. Now, normally indexes, birds of a feather flock together sort of thing. It was interesting today because NASDAQ was down 2.79%, S&P's only down 0.66%, and Russell was up 0.8%. I mean, this is like, well, what do we follow here? Who's our lead dog? I have no clue with regards to direction or markets having any strength. So this is one of those points where we look at relative strength and say, okay, if you're looking long today, Russell was just in an uptrend all day long, whereas NASDAQ was the exact opposite, and we have to identify that as traders and move on. Okay, with regards to the NQ, you notice that it's, to me, even a worse picture than we saw with crude oil because at least crude oil was showing it was making lower highs consistently for about the past month and a half, well, a little over a month. Well, with NASDAQ, we had that going, right? You guys can see from here, we peaked out in early September, right? Had that nice big spike up in early September. On the NASDAQ, you're looking at 12,452. And we started to make a series of lower highs. Well, this week, we actually broke above yesterday, above a more recent high, the one we established all the way back here on the 16th of September. And by breaking that all of a sudden makes me feel like you're going to start to see this form another uptrend and start to move back to the upside as the overall trend here, and I'll zoom out a little bit for you, has been, significantly higher. So this was an example of maybe buy the pullback a week and a half ago, and then we get confirmation by breaking the highs and getting above 11.5. So that's a real difficult thing to calculate. I think the Nasdaq's probably one of the more difficult ones to evaluate, especially with what happened today, down 2.79%. You're whether you want to draw a range, you're looking at trend, you're kind of in no man's land right now in the NASDAQ. So I would probably myself stay away from the NASDAQ. Joseph says Tesla is the reason. Well, it's not just Tesla. I mean, a lot of these FANG stocks have been suffering. Here's TSLA, right? So you had the gap down and Tesla just stuck to the south side. You also had Facebook today. You gap down and stuck to the south side. Here's Apple. I mean, all of them had this big gap down. So it was really almost an exodus from technology where people are just saying, I don't want to do a technology anymore. I'm going to just simply go and move into something else. And that something else today was clearly the small caps and people looking at the Russell 2000, which in theory is very bullish for the markets. Normally when you have people fearful of the market, they're going to take that money out and they're going to put it into very stable, the bellwether stocks, the ones that are really going to, not crash. Small caps are extremely volatile, and when markets crash, small caps usually have a worse time of it. When money pours into small caps, that's generally a sign of optimism and expansion, that people are looking for the big fish, so to speak, buying up all these small companies. So they're trying to get a part of that. So it was kind of a mixed signal today on the way we ended our Friday. It was a very different type of day than we're used to. Let's see. So we'll go up from there to the S&P 500, which I like a little bit better. This is more akin to what I'm used to. You guys can see that September high that we saw on the S&P, we're making lower highs and lower lows right now. We have not broken above that 3,400 mark, which to me would be a fairly positive sign for the equity markets. We have not done that yet for the ES. So it still technically looks like it's in a shorter term downtrend here. Obviously, the longer term uptrend coming from those March lows, which, you got your buy point, came right into an area of demand. We've been talking about that one. Now the question is, where does it go from here? I actually expected to see worse selling. I thought these numbers would be much worse today, and I'll explain that when we look at some of the economic announcements that came out today. But all in all, S&P 500, I believe, is looking more bearish, and I'd be inclined to think we're going to see this sell off next week. Now, we move on up here to Bitcoin. Similar picture, but you have what's called a pennant formation. For those you might not know what a pennant formation is. Actually, how many know what a pennant formation is? I'm guessing you guys have all watched the show long enough. You know what a pennant formation is. I will draw across these lows here, and you can see the little triangle start to form, and I'll go across the tops. Now, we could do this from multiple places, guys. Some of you might draw your pennant from there, right? Oops, let me get that going, right to there, so you guys can see you have, lower highs. You also have higher lows, which is a pennant formation where it starts to compress together. Some of you may also draw your line from the most recent highs. Either way, it doesn't make a difference to me. It still paints the same picture that you have what's called compression of price. And compression of price means that there's decision being made on the part of the buyers and sellers. No one wants to step in and chase it higher or chase it lower. So right now, we are just seeing sideways action on Bitcoin. The good news is we have kind of found a base at that 10,000 and has not been able to break below it. So for my Bitcoin fans out there, this is good news. If we can stay above 10,000, most likely we'll see this break to the upside. Since that previous trend from March was up, it should break to the upside. All right, gold, G to the C, down 0.64% today. Now this one, you guys remember we were talking about that descending triangle forming on gold. It finally broke. I had a couple nice trades to the south side here. I was really expecting it. If you're a Dodgers fan, you know what the pennant is. You just can't win the World Series. Is that right? Is that how it goes? Oh, too soon? Too soon? I'm a Giants fan, so I hate the Dodgers. Actually, I don't hate the Dodgers, but I love to hate on the Dodgers, especially that I live down here in Southern California. If you guys notice, where did I expect this to go to? I've kind of felt like it stalled early. I put a little line here on the lows that we saw for gold that goes back to last week, and I was expecting it to drop a little bit further, down to the 1825 mark. We didn't. We stopped about 25 points higher, so it's okay. It just unfortunately didn't get a buy entry for me. That's all right. You don't have to get every trade, but right now it begs the question of where are we going? That was a tough one, huh, Daryl? My good friend Patrick is a giant, I should say a huge Dodgers fan, and he's always giving me a hard time, like, oh, Giants didn't make the playoffs. I said, Yeah, well, at least we didn't choke in the World Series over and over and over again. But hey, this may be their year. So right now, I don't know. Let me ask you guys just to engage you here. What do you think with gold? I know, Brendan, you're always a long time straight up bullish guy on gold, but just from a pure technical perspective, what do you see on the charts here? I don't know. Are you guys bullish or bearish on it? I'll give you my opinion here in just a second, but I'm kind of curious to see what you guys think about it. You know, I guess it depends on your time frame. Because if we look at this chart here, well, long term, it's certainly looking very bullish, right? You can go to 1450 back in July of last year, and it's just been moving up. Great. But, you know, what about, let's say, the next 4, 5, 6 months? You know, if I just look at this, and this is why I love trading, right? Just first two people that commented were opposites. Raj says bearish. Joseph says bullish. I've got 2 bullish, 2 bearish. I'm actually neutral on gold right now, not buying or selling. That would probably be the best answer, Big M. I think that right now you're kind of in that where are we area. If we are in fact continuing to trend down here on gold, and let's just draw that trend line in, which I know it's loosely drawn, guys. You're like, pick one, Merlin. You're gonna go bodies or wicks. I'll do bodies just because I like the bodies better. Then you could argue that we actually hit that downtrend line right now at right around 1900 on gold, and that may lead to more downside action. It just kind of feels like we have started a short-term downtrend here on gold, so my bias would actually be bearish. I agree with, I saw Raj, he said 1800 looks good. For me, it's a little bit higher than that. It's like right here. It's like 1820 would be where I expected it to go. It didn't. The next level down there is about 1750, which I think is a much better area. But we'll have to wait and see what happens here. For me, it does feel like we're starting to see some weakness come in on gold chart, and that may continue to trend down here. So, cool. Fundamental and technicals is bullish. Yeah, well, rising dollar is not very bullish either. And we can look at that real quick. You guys know I mentioned I am long-term bullish on the dollar. We saw this week it actually fell pretty sharply. We bounced today, which is no surprise. It's one of those things where when you draw a line in across the tops here, right? I'm drawing it basically the highs from August through September. You know, as we came down, we retested. So if this holds right around that 93.70 mark and we get some upside movement, then I think you're off to the races and have another leg up in the dollar index. So to me, I'm still bullish on the dollar. The falling dollar actually probably helped gold out a little bit. All right, this little rally we saw over the past few days. We'll see if the dollar starts to rally again. Then this will start to sell off, and we'll see that go south side. All right, 10-year, not really worried about the 10-year. Here's the outlier today. Russell 2000, just 5 straight days of just awesome trading, actually 6, right? You're seeing significant moves, sharp moves to the upside on Russell 2000. To me, this is a risk-on type of play where people are growing an appetite for more risk in that space. Conveniently, though, for those of you who are bullish, and by the way, I just sold some puts. In long-term accounts, I just sold some puts on the Russell 2000 IWM is what I sold them on. So I'm looking to buy this lower. We are coming into this 1550 mark. So as we come to that 1550 mark, be careful. That may be an area where it's going to have some struggles and start to turn. Instead of me just selling puts, I'm actually looking at potentially buying some puts on this one. We'll see if it can get up to that 1550 mark. But that's my my goal for the Russell 2000. And that, guys, is your number one performer for the day. R to the T to the Y, Russell 2000. All right, I've been talking for 15 minutes straight, so let me have a sip of my frosty, cold Lexington whiskey here. Raj says, what if we get another stimulus? Raj, this is the challenge that we all face. We can actually do all the analysis we want. We can come up with the perfect plan, the perfect strategy, the perfect fundamentals, the perfect technicals, and everything could be absolutely perfect. And then all of a sudden something happens which creates a knee-jerk reaction of a shock factor out there. So my guess would be, given the fact that some of these numbers today, let me show you this here real quick, just so you guys can see the fundamentals that came out today. I didn't highlight a lot of them, but I will bust out my handy-dandy drawing tool, which you guys know I am actually horrible at drawing with a mouse, but we'll do our best. The numbers that I found interesting for today, number one was this, the non-farm employment rate. All right, so this, we've been seeing that number decline, and it's continuing to decline. They thought it was going to go from 1.4 million new jobs created in the non-farm area. They thought that would go from about 1.5 million down to 900,000. Came out at 661. That means that there's a significant contraction in new jobs in those areas. Now, it's still somewhat high compared to historical numbers, but this number's dropping much faster than people expected. Now, we had kind of a plus and a minus out there because if you notice directly underneath that, you had a 7.9% unemployment rate today. That was way better than expected. We're seeing the initial claims drop. We're seeing a non-farm employment change was actually doing very well. So we saw unemployment rate drop sharply. You're kind of going, well, which do I hang my hat on here, the unemployment rate or non-farm employment change? I would look more towards non-farm employment change because unemployment rate, depending on what we read, this is the U3 rate, the U6 rate is probably a more accurate reading of the unemployment numbers. Now, down below that, you also have some negative stuff here with factory orders, right? Factories, really a sign for us getting back on track and for markets moving. Notice we went from 6.5% gain month over month last month. They expected it to drop significantly from 6.5% to 1.5%. We came out at 0.7%. So not good. Factory orders really contracting. That may actually line up with some of this non-farm employment change. So those to me are maybe some of the reasons why we saw the market do what it did today. And then you couple that with, let's go to the S&P futures here, bust out the 5-minute chart. And this is one of the reasons you guys should be at least have a futures account open somewhere. Here you can see when the news was released that President Trump had COVID. I mean, we're talking an initial fall very quickly from right around 3,362 all the way down to a low of, I'll get the exact number for here in a second, 3,300. So you had a 62-point drop in the S&P futures in about 30 minutes based off that news, and I think the volatility this coming week would be even more significant. So back to what the topic was. What if we get another stimulus? Well, obviously, that would be a positive factor for the markets. But here's the thing, Raj. If we do get another round of stimulus, markets are already anticipating some degree of stimulus. Now, I don't know what that is because I'm not on the institutional side. I'm a retail guy. If they're expecting, let's say markets are expecting $2 trillion of stimulus to come in. And we do get a stimulus package, but it's only $1 trillion. What's going to happen? Do the markets rally because we did get stimulus, or do they crash because it's nowhere near expectation? And that's the wild card we have to take as traders, and it's a challenge. It's a real challenge when you're faced with these just giant numbers, and how do we deal with them? So if we get another round, I don't know which way it's going to go, Raj. I can't tell you that. I don't have a crystal ball. I wish I did. All right, let me see here real quick of that screen. Let's see. John O'Donnell, JOD. Well, I wasn't going to bring him on every Friday, but I can probably bring him on more if you guys like. Which small caps lead IWM today? I don't know. I don't break that down. I do not break that down at all. There's still 2,000 of them in that Russell 2000 index, so unfortunately I don't take the time to really break those down and find out. But we could very easily. I think. Sorry, my sinuses have gone nuts today. No, it's not COVID. It's just a runny nose. Let me go in here and see if I can add another list. It's kind of cool the way you can, let's just do this. I'm going to call this Russell. I'm not sure if I can get the Russell 2000, but one of the beautiful things in TradeStation, you can actually go in here and insert a symbol list. And I'll go to TradeStation, Index Components. Yeah, they don't give me the Russell 2000. I can get NASDAQ, Dow Jones, CBOE indexes. Yeah, unfortunately, I can't get the Russell 2000, which would be really, really cool if I could get that. All right. But it's also, for those of you who do trade on TradeStation, you could go into industry groups. So let's say anybody have a favorite sector? I'm sure somebody's got a sector out there that they love or really are into. You can go through here and find all the stocks that are within a specific sector. I think that's kind of a cool thing too. So I'll just make it up since it could take a second here for you guys to type in. But let's say you wanted to go into financials. All right, we know most of the big financial names, but I can go through here and let's go look at regional banks. I can just click that, and all of a sudden, boom, I've got 240 regional banks lined up very, very quickly. So nice filter features in TradeStation in their radar screener. Okay, so that was my comment on the stimulus. Who knows? Joseph said at the very beginning of this that we don't want to be political, and I certainly don't want to be political, but you have to look at this news about Trump, and there could be significant ramifications for it. And what happens if heaven forbid he should succumb to coronavirus. It's legit, and he ends up passing away from it. I mean, this could send the markets just in absolute chaos, because who knows what happens with the election, what happens with Pence, and who knows all the issues that come up. To me, that's kind of one extreme side of the spectrum. The other side is, and there's a lot of talk about this too, that this is just a hoax, that this is just something to gain some sympathy and publicity and actually just stay out of the debates. Who knows? All I can tell you is that next week, the status of Trump, good or bad, is going to create major waves in the market. So I think next week you guys should be really careful, because if you look at the economic calendars, if you look at the earnings calendars, there's really not a lot happening next week other than a Reserve Bank of Australia making an announcement on Monday evening. Other than that, next week's real quiet. So I think the markets are going to be starving for something to drive the markets one way or another. Now, the week after that, we've got earnings season and a bunch of major economic announcements. So it's back to normal with those announcements. So next week, very, very critical. This whole Trump thing, I think, is just going to create a very, very bizarre trading week next week. I, for one, will be very, very careful not trading much. All right. I expect the expectations to be off by greater than expected amounts of expectations. Yes, that's a great expectation to have there, Tom. I was expecting that as well. All right, so I see a couple stocks. Let me go through a couple listener questions here, and then I will get to Bed Bath & Beyond, which I can't believe they're still in business, and they're actually doing rather well. And we'll also look at United Airlines. Okay, let me go to a couple questions here. Let's see, what was the first one? The first one... Bear with me. I moved some things around. This was a good one. This one came in the other day from Mario. Mario says, McCormick & Company announced a 2-for-1 stock split. Would you consider a long position until actual split date, following what has happened with run-up in the recent stock splits? Great question. Now, for those who may have missed it, we talked about on the show on how there's this phenomenon that when a company announces a split, generally what happens is the retail investment population, I'm assuming it's just retail, that's an assumption on my part, maybe it's institutional as well because of historical patterns, they jump in and they start buying the shares because they're thinking I'm going to own double as soon as it splits. So I believe it's December 1st is when they're actually going to do the split. Now, you guys remember we saw with Apple and with Tesla a huge run-up going into the split. I mean, it was colossal. Here's why my answer for Mario on the McCormick one would be no, I would not buy it. Why not? Because McCormick isn't a bellwether. I know if you're a spice lover, then McCormick is obviously critical, but it's not in the news every day. It's not an Apple, it's not a Tesla, it's not a Google. If Google splits or if Amazon splits, I'd say buy some. As soon as they make the announcement, buy some and hold it until the split. I know it sounds crazy, but just history has shown me that these things tend to rally because the herd mentality is to buy these companies because psychologically I'll have double at the end of this. So I'll look at the chart of McCormick here for the viewers. Ooh, is it MCK? Oh man, that's a tough one. Been a while since I traded McCormick. That's McKeeson. 1 second. Let me bring up McCormick. I forget the ticker symbol for that one because it's not a popular one. I don't really trade that bad boy. Let me see if I can bring that one up for you. McCormick. It's got a weird one. So it's MC. I thought I just put MKC. I put it backwards. There we go. McCormick. All right, so there's McCormick. We'll put up on a daily, and as you guys can see, it's been phenomenal. Everybody cooking at home apparently has been good for McCormick. Got to buy them spices at ridiculous prices, right? Gotta love McCormick. It's so funny because I do a chili cook-off every year, and the spices that I need for the chili cook-off, if I was to buy them from McCormick at the regular grocery store, my pot of chili would cost me like, I don't know, $1,000. Instead, I go to a place where I buy them in bulk, buy wholesale stuff, and you can buy, 100 times as much for the same price. That's the way to go. Anyway, these guys have a spice market monopoly. Here's your chart of it. You look at this chart right now. It still looks bullish. I mean, strip out the fact that this is McCormick. It looks bullish. It looks like we're just here in a little bit of a pullback, and we are headed for some more upside movement. Now, to buy it just because a 2-for-1 split, not that big of a deal. I don't think that it's mainstream. I don't think that it's important enough to buy this one based off the split alone. So that would be my reaction to you, Mario, is just stay off it. Not for the split. Maybe for the price action, but not for the split. Now, I'll tell you, when Amazon says it, because Amazon will say it here soon. If you look at the price of Amazon, you just know that they're going to do a split at some point. You're at $3,100. as soon as Amazon says that they're going to do a split, you will probably see one of the biggest surges because everyone's going to want, and they'll probably do a 10 for 1, right? It would make sense for Amazon to do a 10 for 1 split. The price would still be $300 a share. It's still expensive, but people will buy that one. So I think to me, Mario, it depends on the company, depends how popular they are. The more popular mainstream a company is, the more boom it's going to have as soon as they announce that stock split and the dates for it. Okay, let's see. Baldhead B says, yes, I bought some VIX calls at the beginning of September due to the craziness. Probably a good idea. I think that the next few months are going to be very volatile. My guess is you'll probably see markets sell off with the uncertainty, especially if anything bad happens with Trump and the coronavirus. So we'll see. Where's JOD? I see you got some lovers and haters of JOD out there today. I'll bring them on. Maybe I'll bring them on every 2 weeks. John's always fun to have on the program. As long as we stay away from politics, right? No politics. All right. Let's see. Next question that came through. This was from Otto. Otto down in South Africa. So Otto says this. And this, unfortunately, I didn't get the chance to get to it soon enough. He says, demand zone daily between 40 and 43 on Valero. That's VLO. He said, I bought some today, September 29th. So, again, this is a couple days old. Sorry, Otto, my bad. $44 is where he bought it at. Stop loss is $39.50. Initial target's $58. Any comments and or other higher targets that I might want to consider? Now, had I brought this one up, I actually like your analysis. So I'll go VLO, and we can bring up Valero here. I actually have your levels marked off. So, unfortunately, you were stopped out today. Okay? That's fine. Unfortunately, it stopped you out. But if you notice here, the reason that you made that trade, I like it. I am just way too... My entry would have been much tighter. For example, you can see here you said you bought it at 44. I'm curious why you bought it at 44. There isn't really any sort of demand zone here. And if anything, I'm looking at shrinking this demand zone down to maybe something like this, where it goes between, let's call it 42.50 and 39.50. Now, the big question is, did you put your stop in the right place? Now, I'm not going to get into that. That's something that I think would be reserved for Almanac Trading Academy graduates, and I know we have a lot of people here who aren't in the classes, so let's save that for the classroom. It's not that you should have put your stop loss right at 39.50. In my mind, that is like a couple pennies below this low, which was 39.67. I think you need to do a little bit deeper analysis there, maybe of ATRs and things, and I would have put it a little bit further out. That said, this gap down today probably would have taken my stop out anyway, right? And again, what are you doing? You're going counter trend. You were buying something that was falling for month after month from over $75 down to 40. Not that that's a bad thing. You just have to know that you are taking a big chance going counter trend trading here. So I like the trade. I actually like the setup. My target would have been before 58. I probably would have been targeting somewhere up here first, right around 55. Then gone 58, and then there's another level higher up, probably around 66, and then lucky maybe get up to like 75. But a little bit different take for me is just you're taking a big chance here because you're going counter trend. If anything, on Valero, you want to be shorting the rallies. As we know, energy has been one of the weakest performing sectors out there. Now, Joseph says 37.31 DZ. Let me just double click so I get the exact number here. 37 point, what'd you say, 31? 31. A little bit further down. Now, I would have to break this apart into a smaller time frame because I still wouldn't go there. I would probably be looking even lower. Now, let's bust this into, what am I going to do, 4 hour? I got to go back a long time to get to there. Let's try a 4 hour time frame and see if I can find any zones that are in there. It could take a while because it has to load up a lot of data. I gotta go back, like 300 days? Yeah, it's gonna take a while for me to load up here. Sorry for the sniffles, guys. Something just driving me crazy today. I don't know what it is. All right, so let me scroll on over here and try to find those levels down lower. So here is your 4 hour time frame. There's that 37.31 that Joseph was talking about. I would most likely be further down. I'd be looking somewhere around 34.80 would be my target for that. For counter, and Mario, you nailed it, Mario. Mario says for counter trend, it's better to have a confirmation entry. Yes. It's harder because you leave money on the table, an example like that, right, when you're looking for a confirmation entry, but you do have the benefit of knowing that this did, in fact, turn price. There's always that trade-off. You can wait for the confirmation, but now you're chasing it because it's leaving your zone, right? It's gone in and now it's coming out, so you're chasing it. If you are, getting it as it's going into the zone, as it's falling, you're catching a falling knife, and you don't know if it's going to turn yet. So it's really challenging to kind of nail those things spot on. It's just part of the risk we take as traders on a daily basis. Okay, what was the other one? I had some other questions here. Let me make sure I get to these questions. Okay, Walter. Walter sent in this one, and I like this one because I'm a big fan of using alerts to let me know what is going on with specific stocks. So hold on one second. All right, gotta get that one out of the way. Look, with regards to alerts, he says, what services can you recommend me for stocks, futures, SMS, or call price alerts? It says, either free or paid. I use TradeStation Mobile right now, but it has already lost me some really good opportunities by not notifying me in time. I'll be honest, I don't use any other services outside of the software. I actually do like the one that's in TradeStation. I tried the one on Thinkorswim and Schwab. They're not that great. So most of my alerts are set up in TradeStation, and you can set it up where they can alert you via email, which is probably the easiest. Text didn't quite work for me. I couldn't get that one to work. But you just have push notifications and send it to an email that is dedicated for that type of email. So, I have an email account that's set up specifically for alerts. So when an alert comes in, I allow that one to be pushed. Most other email I don't allow to be pushed because I don't want to be annoyed by having my phone light up all the time. And that one I do. So as soon as alert comes through, it'll show up. Let me see if there are comments on that one. Fidelities. I have not been hanging with Trump, man. I haven't been drinking with nobody, but I swear I got home today and maybe I just need to dust my house. It's my dog and the dander that he's got, but man, all of a sudden my sinuses went crazy. I'll show you some of the cool things. I don't know if a lot of you guys are using alerts, but I'll just show you in TradeStation some of my favorite things I like to do. I'm a big alert fan. So when you're looking for specific setups or trades, things to happen, one of the challenges we have is you're sitting there watching it and waiting and looking at it every single day for these things to happen. Let's say, pick a different stock. Let's go to Tesla. Why not? We'll go to the crazy beast here. Let's say that you wanted to buy Tesla when it came back down to 350, right? You can put a limit order in, but there's a challenge to that, right? If you put a limit order in at 350 and say buy if it gets there, the dynamics, the marketplace may have changed, right? And I want to reevaluate it when it gets down to 350. So with TradeStation, it's fairly simple. You can just right mouse click on these lines, you double click on the line, and there's a box that pops up. I know it's kind of hard to read for you guys at home. It just says alerts. So you can go in here, it says enable alert, and I can do all kinds of different customization. I can go to messaging here, and I can have it send via email, and that's generally how I have mine set up, is to go out through the email alert and send it to a specific email account, as I mentioned, that I have enabled for push notifications. Now, one thing I would recommend if you ever do this, you see you got three options: alert once per bar, or alert continuously. Do not do continuously. It will just sit there and annoy the living daylights out of you. And if you got like 10, 15 alerts that I can sometimes have quite a few going, it'll drive you absolutely crazy. So make sure you do not use alert continuously. Alert once. A little box pops up on the screen to let you know that alert has been hit. Naum says, where's your Friday cocktail? Well, fancy you should ask that. It's right here in my hand, getting nice and cold. Is that a nice hammer to you? Adam, are you asking on this Tesla trade? No, it's not a hammer. If you're talking about this last candle, you're talking about this guy right here. By itself, that candle means nothing, okay? By itself. These should all be looked at as in conjunction as to where, or in context of where it's at. So if this red candle was higher, let's say it was up here, right around 460 with its long tail, I'm loving it. I'm really looking at this as a bearish move for the next day. Now Tesla, obviously we're on the weekend, so things will change by Monday, so I don't put too much weight on this. But let's say that this was Thursday night's close, and I'm now looking at Friday's trading session. My bias is already going to be slightly bearish on this based off that candle, right? It was pretty much up most of the day, and all of a sudden, for whatever reason, sellers pushed it back down to the dead low. That's bearish sentiment. So it's more a shooting star, Adam, is what we would call that specific pattern. That's the one. But I don't really like this candle by itself. It'd be better if it was higher up. The more extreme they are, meaning at the end of an uptrend or downtrend, the more valuable they become for me. Mario says, I have a workstation, trade station just for alerts. Yeah, it's so much, I don't know. I think it saves us a ton of effort as traders and investors to have alerts set up. Whether you're long-term or short-term, doesn't make a difference to me. It's just set those alerts. It makes it much easier. Go out and go golf, do what you want to do, and let the platform do a lot of the work, heavy lifting for you. Okay. Next one. This is from Jeff. And I think you might be with us here today, Jeff. Jeff's usually in here with us. Jeff says, are gaps as tradable using the .D? For those who don't know, on TradeStation, if you type in a ticker symbol and you say, or like a future symbol, and you say .D, it removes the overnight sessions and just focuses on regular market hours. Are gaps as tradable using the .D chart? The gap from Sunday night and the ES gapped up as if it was up. It was filled in the after hours, but if you look at the SPY or the .D, the gap is still there. So bottom line is this. Yes, .Ds can help you. I'll show you an example here if you want to look at the .Ds. I'm going to put the S&P futures on the bottom. So here's your @ES.D. So this is the S&P 500 futures stripping out, taking out the after hours trading. So it's just regular market hours, the equity market's open. So what you're going to really do is you're going to end up with a chart that looks just like the SPY. Now I got a bunch of lines drawn in here, so let me get rid of some of this stuff. But you're going to get a pretty similar picture here with regards to how prices moved. I mean, don't these charts look almost identical? They should be very, very close. And yes, the gaps are the same. So the gap on SPY is going to be just about the same as that ES. Here's the challenge. If you go far enough back, so I'm on the @ES here. If you go far enough back, the chart numbers are very different, right? So this may look like they're the same, but they're not. If I take this gain, and I'll do snap mode here just so you can see, the longer time frame you use, the more dangerous those .Ds become. So let's go from peak to trough. That S&P is up 5.8% in the last 196 days. I'm going from the peak right before COVID to where we are right now. And normally, this is really odd, not proving my point at all. Normally, the adjustments are so different that the SPY would actually be doing better. So you got a weird switch where it's not normal. But there generally is going to be separations here, which is why if you look back historically, the highs from 2007, they're different if you look at them on just the @ES versus @ES equals 107XN, that type of thing. Yes, Koja's right. If you're using TradeStation, you would use something like the @ES equals 107XN. That would allow you to see the charts as they really looked back then and not be adjusted for dividends and stuff like that. All right. Let's see. What else? Okay. Let me see if I got any more last minute questions here. I'm going to do this one for Tom just because Tom's here with us today. Tom says, as I look at and this is a great question. It's one that's perplexed me as well over the years. He says, as I look at the zone for SPX or FANG fund, a little voice says Apple is steadily declining with no demand zone in sight. Microsoft is chugging upward in a channel toward a couple of demand zones. You mean supply zones. Google is going sideways, and there are 497. Actually, there's 500 other stocks. I believe there's 503 in the SPY, or in the S&P 500. How can you consider zones on the herd of cats? I do believe the markets tend to move together, but there are different zones for different securities, and they all move differently. So that's why I find aggregate zones hard to trust. Yes, and here's the thing. When we look at individual security, Tesla, Apple, Facebook, Microsoft, doesn't matter. You find a supply or demand zone, then yeah, that is going to be evident because it's the result of the buying and selling of that one security. The challenge in looking at, let's just say SPY, for example, you have 503 stocks in there, and who knows, it might be 504 or 502 or whatever, but it's the S&P 500. You have that basket, and you're right, Apple may be ripping up, Google may be ripping down, Tesla may be totally sideways. How does that demand zone work for that basket? And here's why I think it works and why I put much more weight on it than I actually do for an individual security. Is how much money is out there chasing the big basket of stuff? Meaning how much are fund managers buying of SPY or SPX or S&P futures to hedge themselves or to capitalize on market moves? So they're actually buying the basket of securities. Now you also have arbitrage happening on specific specific market. So if it tends to get out of whack, SPY versus the futures market, they'll arbitrage that back to a normal price. Therefore, because you have such the big institutions, the ones we're actually looking for, according to Online Trading Academy strategy, which is let's find the big guys, they're the ones who are moving the SPY. They're going to go out there and be buying all of the index because of a portfolio requirement or a client requirement, but that's the big money. Instead of buying individual stuff, they're more inclined to buy the big stuff, if that makes sense. And I think that when you have the global community accessing our markets through an ETF or through futures or an index like SPY, then that is going to develop its own supply and demand. So I know it's a really tricky thing, Tom. I know it's tough because you're like, well, wait a minute. Shouldn't it be going up because Apple's going up and it's the biggest component? Yeah, not really. No, remember, it's just a piece of the whole, which is actually why I like trading the indexes, because I don't get subject to one company ripping me up or down in that market. So I know that wasn't a clean, definitive answer there, Tom. I don't really think there is one. I just think that because the supply and demand principles, as well as the institutional buying and selling of it, that you're probably going to see those levels hold up. And the proof's in the pudding. Just go back and look at price charts and see where things turn. Some are going to be much more reactive to supply and demand zones, and others are going to be, just blow right through them and they don't care. I find indexes to be a little bit more responsive to those zones. Okay, yeah, just use Thinkorswim. Thinkorswim, yeah, but you know what? It's okay. It may get around that problem, but as far as how the platform functions, like as far as the usability, TradeStation to me is miles above Thinkorswim. The charting is so much better, and I do a lot of charting. Okay, what time I got? Quarter till, and you guys asked me about two different symbols. What was that? It was Bed Bath & Beyond, and what was the other? Oh, United Airlines. So, let's bring up Bed Bath & Beyond so I can go buy myself some nice fluffy pillows and a coffee maker at the same time. BBBY. Bed Bath & Beyond. Thoughts on it? My thought is, what in the hell is going on with Bed Bath & Beyond? Look, Bed Bath & Beyond had obviously a huge gap up here over the last couple of days and just a big spike and continuing to rally today. If I bust this out longer term and go to, let's say, a monthly just to see where on earth we are relative to historical pricing, something tells me that Bed Bath & Beyond has issues. I think you guys can all see that. If I look at this price chart here, it's been selling off since 2015. So you've essentially had 5 years of just horrible trading action if you are a long-term investor in Bed Bath & Beyond. Now, the challenge here, not challenge, it's not a challenge at all. The story here is what has changed. And this is where you have somebody like Colin Teddards in the program to talk about what the fundamentals might look like. Things may change. I don't have the patience to dive into the fundamentals on Bed Bath & Beyond because I just don't care. I would find a price chart that looks appealing. Now, that said, and Raj maybe says that Bed Bath & Beyond is a new CEO. Great, good for them. Congratulations. Hope he's a good guy with a good track record. I'm just looking at the price chart, and the only thing that I see here that makes me feel comfortable with Bed Bath & Beyond is we finally got to close above some of these more intermediate term highs, right? It has not been able to make a higher high since 2015. 2015, it's done nothing to make lower lows or lower highs and lower lows. I mean, that's awful. I can put a moving average in here, and it should be pretty tight. Let me see how it looks with the moving average. That's the 50 and the 200, I think. I want to put a 20 and a 50 on there, so we'll do 20. Okay, so we just broke above that 20-period moving average recently, but, it has not been able to make a higher high. Now it has. Now that might, again, be news because that CEO stepping in there, but as Joseph says, broke above the monthly supply zone. Yeah, right? And if you do something like that, that could usher in a new trend. Now, I don't think Bed Bath & Beyond is going to be rising from the ashes because, let's be honest, Amazon's eating their lunch. Everything you can get at Bed Bath & Beyond, I can get at Amazon cheaper. Unless you're my friend Katie, who likes to go buy her fluffy pillows there, and she wants to touch all the pillows. Okay, Bed Bath & Beyond's going to give you an advantage there. Otherwise, it's not going to happen. So, as far as technically, it's starting to look more positive. I think there's a bit of optimism here. The challenge, as Joseph just puts in there, he says, with a gap, yeah, we talked about gap fills yesterday with John Rowland. My gut tells me you're going to see a retest, either of that 1780 line, those recent highs, or filling the gap. But I am feeling more positive because look at the 20-period moving average. It's the first time in 5+ almost 6 years that you've seen it turn up. You guys can see that here on the hard red edge. I'll zoom in. But it's actually just started to move up. Even back here in September of 2019, it never turned up. It started going sideways. But now all of a sudden you actually have a rising 20-period moving average, which is a very positive thing for prices. I'm not saying I'm bullish on it, but if I had to if I had to take a guess, I would say that this thing is going to be moving back to the upside just based off the technical side. Maybe a pullback along the way. All right, UAL was the other one. United Airlines. Okay, this is the monthly. This one still looks absolutely horrible. And guys, you have to take into consideration what happened this week. Let me get these moving averages off here. One of the big challenges with airlines is without bailouts, they're all dead in the water. All of them. They're not going to make it, right? They just be scuttled. If you look at the number of flight traffic compared to last year, if we go, let's say, one full year ago, going to October 1st of 2019, we are running right now at 30% of what we were last year. 30% of the number of flights. So that tells me there's a tremendous amount of upside potential, meaning there's a lot of opportunity here. But without big subsidies and bailouts, they're not going to make it unless we get out of COVID very, very quickly. So Frankenstein took a big breath before he died. Well, I don't think they're going to die. Let's be honest. I think United Airlines is going to stick around. You might see some consolidation. You might see deeper bailouts. But remember, American Airlines said they were going to lay off 19,000 people. United said they're going to lay off, I think, 12,000. The other airlines collectively, another 17,000. So you're looking at 50,000 jobs supposedly going to be cut if they didn't get any bailouts. Of course, you guys know, as of it was 11 o'clock at night on Wednesday, they signed that stopgap to get some funding. The airlines needed $28 billion. They got 14. So, you could look at this and say there's still potential value here in United Airlines or airline stocks, but you also have the lack of funding that they need. I think you're going to still see a good amount of layoffs coming from a lot of these airlines going forward because they didn't get the bailout package they needed, so they got to cut costs somewhere, which ultimately would be good for the bottom line. All right, so long story short is, what do you do with United Airlines? Well, personally, I would find some level that I'd be interested in buying it at. So let's say that $30 mark. And why $30? Well, I'm just throwing it out there because it's like the low point for the past 6 months, 5-6 months. You could go out there and you could be selling some puts at $30 and say, okay, it's just traversing sideways. So if it doesn't get to 30, great. If not, I will be collecting some premium. And I do understand, guys, that the option market is closed right now. So let me just bring up my Option Station Pro here and see what I can find out about with regards to the premiums that options are going to be paying on United Airlines, just to give you an idea of how much you could collect over various periods of time. So I've got all strikes. Let's go to 40 out here. That'll make it better. We'll go UAL. And hope you guys can see that. Okay, great. So as this one opens up, so for the next 13 days, we think it's going to drop to $30 from 36. Well, that's like an 18%, maybe about an 18% drop. It could, absolutely, especially with the uncertainty going on. But let's say I want to do the 30s. So I could be out there selling puts, and again, market's closed, so this is not going to be the best pricing. You're looking at 37 cents. So you're only going to make $37 per options contract, but you could be generating something for the committing yourself to buy United Airlines. You could go higher up, obviously, and maybe get some more premium, but there's not a ton of premium in selling those puts right now. I think a lot of people are feeling that this sell-off may be done. Back here when it was tanking like this in March, you guys remember, I sold a bunch of puts on UAL at 25. And I mean, the premiums were huge. It was a 19% rate of return for like 20 days to hold them. It was crazy what the premiums were. Now, not so much, but that's one way we could be looking at using options here. I'm not that excited about United Airlines, to be honest. I do think it's going to survive. In what capacity? I don't know. All right, what else do I got? Let them burn, said Joseph. Yeah, well, I don't know. I'm going to be that bad about it. All right, let me go and show you economic calendar for next week. We are already on the next week part of things. All right, I guess I am. Here's what we've got cooking for Monday. Really, earnings-wise, next week is kind of a ghost town, guys. There's not a lot being talked about next week with regards to earnings, so not much. Economic announcements, there are a few, but it's just not on Monday. This is all we have on Monday, the 5th of October. You have ECB President Lagarde speaking. You have FOMC Remember Mester speaking, you got Tokyo Core CPI, and that's pretty much it. German preliminary CPI. Nothing here that's very, very noteworthy. I do think that the story for next week, whether you believe it or not, is going to be the health of President Trump, which, obviously could have massive impacts on our markets and our economy and just the elections in general. It's going to really create a bizarre event. So that will probably be the most important thing that's going to happen over the weekend. We'll see how it all transpires. Volatility is probably going to be very high, as I mentioned, because you don't have a lot of stuff to drive the market next week. When you don't have things moving the market, the traders and investors will look to things. They will almost force things. So if we don't have real earnings to look at, not a lot of major economic announcements, they're going to look at whatever. It'll be election. It will be President Trump. It will be probably relief or bailout packages, more relief going on, more stimulus stuff. So that's probably what you're going to end up seeing next week. I guess for next 4 weeks, going to the hospital. I'm not going to the next 4 weeks. I do have a bunch of great guests happening for next week. By the way, Monday, we have the editor-in-chief of one of my favorite books out there. Let me go to my library over here. The Commodity Trader's Almanac, or Stock Trader's Almanac is the other one. I just can't find my Stock Trader's Almanac, but these are pretty much my favorite book. If you have a friend who's into trading, this is the book. It's just a nerd. If you're a market person, if you love markets, this is the thing. So let me just go today. Let's see. It's December 2nd, right? Let me see. Is this December to January? Because every day there's some really nice quote, and I always love the quotes. I think it's entertaining, and it's just so packed with stats and figures. Oh, this is a long one. All right, you guys are going to be tortured as I read this one out to you. It says December 2nd. Whatever method you use to pick stocks, your ultimate success or failure will depend on your ability to ignore the worries of the world long enough to allow your investments to succeed. This isn't the head, but the stomach, and determines the fate of the stock picker. Peter Lynch, 1994. Little stuff like that. So every day you get a nice quote, and plus just tons of facts and figures. The editor-in-chief of this, Jeffrey Hirsch, will be our guest on the program tomorrow. Pretty excited to have him on. We'll go through overall markets, outlooks, forecast, and if you guys have some more questions with regards to markets or statistics, happy to talk about that with Jeffrey Hirsch on Monday's program on Power Trading Radio. All right, guys, that's going to do it for me. I see I'm losing viewers quickly. So if you enjoyed today's show, do me a favor, give me a thumbs up out there. Of course, you can always leave your comments and questions down below the YouTube page there. Also, don't forget, Tuesday at 4 p.m., I'm doing a webinar with Bob Dunn and Bill Henner, all about stories from the trading floor, which is going to be a lot of fun. I love talking to these guys, and I'll share that link with you guys on Monday. That will do it for me, everybody. Have a fantastic weekend. Be safe, be healthy. I'll see you on Monday. Take care. Whew, fuck, it's hot in here.